please read this disclaimer carefully before proceeding further. Hello and welcome to this custom analysis report on SnP500. Thanks for ordering this report. Right, so what we are going to do is actually we're going to split this analysis into multiple stages so that we can form the whole picture of what the market has been doing and what the market is expected to do. What the market has done is that market has been creating this huge candle. Right, and I'm looking at a yearly time frame. So for past 6 months the market has been falling down, and before that we can see that there have been 3 years of continuous movement upwards, right, which means that market is still bullish, and this is simply a correction on last 3 years. So the market has come back down to correct. So this is how it is. So the market is going up and we are having a correction. Once the market reaches a correction level, usually it bounces up, right, and produces a correction on the previous one and then starts to fall down, right. Now if the market continues to rise up like this and breaks the previous high, then there are two scenarios. One is that we check for the divergence sort of thing, and the market can fall down after creating divergence. It can create an extended M, or there can be another scenario where the market can fall back down to retest this previous structure or somewhere around here in the middle of this leg and then start to go up. So this is the usual behavior of how the market is. Now here what has happened is that market has gone up and now it is falling down. So this is simply an upward move followed by a correction at the moment. So you cannot just anticipate that market will continue to fall like this. And anything can happen in the market, right? As you know that Bitcoin is went from near about 3,000 or something to 64,000 or 67,000 in a very short span of time. And this market actually started to rise up during the time of COVID-19. So anything is possible, but in terms of technical analysis, in terms of pattern, what we have is that we have impulse and then we have a correction at the moment. And correction is, as the name suggests, is just a correction, right? So after a while the correction usually halts and then it starts to reverse the market trend. So next thing that we can do is drill down to near about 6 months time frame. So right now we are in the month of June, which means that we are reaching the half year. So 30th of June is going to be the last one. So right now what we have, again, similar sort of thing. The market has been going up and since then it has fallen down. So last 6 months the market has been bearish and it is producing a very large engulfing candle here. However, as I said, this is simply a correction on the previous bullish momentum, right? Pretty much like how it happened here in the past. Market went up, correction, and then it started to go up, correction, can go up, correction. So right now the market can still go up, although this is a bearish engulfing candle. The market can still go up a little bit at least before it starts to fall or before it starts to decide to go all-time high. Right, so do not worry about this engulfing candle as of now, right? We'll have to see how the market actually ends on 30th of June, and then we can have a look at this. Now let's go to the 3 months time frame here. So if I go to 3 months, what we can see is that this is turning out to be a kind of this sort of thing. The market has gone up and then we have a correction, but remember this candle is showing that market was expected to fall down. This candle created a fake breakout sort of thing. Personally, I was also looking to I was expecting market to fall down from here, but market created this upward move for 3 months and then it started to fall down. And I posted that analysis as part of my overall analysis covering Apple and other stocks, where Apple all actually started to tank before S&P 500 or Nasdaq or US 30 Dow Jones started to tank. So this all ties up, and we will see some of those things later on. But what we have here in terms of candlestick is that market has been going down and it has reached a level here, and the market can push back up. So this is what we have. Now let's go to the 2 months time frame. On 2 months time frame, we have this sort of V sort of structure. Now in our FCP methodology, there is nothing called V. We always have W or M sort of pattern. So we will see that on monthly time frame. But what we can see is that we have these 3 candles here, okay, and this pattern is usually a combination of candles which creates a bullish candle. So that means for the next 2 months, after the month of June, it is possible that there can be a bullish candle for 2 months. Okay, so that means the market can go up. Now let's go to the monthly time frame after this. On monthly time frame, what we have is that market came to this particular level, which was published near about 2 months ago, 2.5 months ago here. And the subscribers of this report were able to take benefit of that, and the market actually went back to this upper level and fell back down from there. Now what is happening here is that this candle is doing nothing but filling the wick of the previous candle, which is very common thing in the market, and it can still fall down to this level, the previous wick level, or even slightly lower than that, and after that there can be a bounce up. So beware that all of these things are showing that market can rise up for at least a month or 2 months or so. Okay, it can even be longer than that, but we'll have to see as and when that happens. Let's go to the weekly time frame. On weekly time frame, these levels were given to the report users. The market came right into this level here, went back up, got rejected by this level. Now it is coming back down. Now what you can almost immediately see that this can actually form a double bottom, even though double bottom can be a divergence based as well. So the market is falling down like this, and after that it went up. It can come down to the same level where it can create double bottom, or it can go a little bit further down to collect the stop losses, and in that process there can be divergence, and then it can rise up. So beware that the market could be heading into this previous wick here, or this zone, or slightly lower than this zone, right? So that is what we are looking at. Now these sections that I've drawn in gray, these are structure levels. These are very important structure levels, and market will try to have some sort of reactions around these structure levels, okay, because these are kind of consolidation bits, right? So this is where the market did the accumulation and then started to break out, and then break out. So whenever the market comes to these consolidation zones, the market usually reverses, and that's what happened here, and it can still happen once again. So beware of this level here. Okay, let's go to the daily time frame here. What has been happening? So on daily time frame, the market went to this zone here and fell down. Now in this process, what you can see, there are few things which are happening. One, there is an M pattern which is forming, and when M pattern completes, the market goes up. However, in our FCP methodology, this is not one of the strongest M patterns. So this M pattern can fail, and the market can actually fall through this zone, collect the stop losses, and go back up. So as I said, we are looking at mainly 3 levels here initially. One is this pin, this level here. Second one is this one. Third one is going to be this one. Okay, and I'll give you those levels here in the next chart. But you see, in this chart, we are just trying to assess what kind of structure we could be having. Now, if the market breaks through this structure here, then obviously we will have a W sort of pattern. So this, if the market starts to go up, there is a good possibility that it will try to come here, and if it breaks through that, then the market can actually rise back up to somewhere around here, to somewhere this structure around here, okay, which is going to be 4480, near about that structure, or even higher than that. There are several gaps left here at the top as well, and there is one gap. Why the market is coming down here? Because if you check a Dow Jones, and I think it's available on S&P 500 as well, there is a gap left here, and the market is coming down to fill that gap up. And once that gap has been filled, there is a good chance that it can start to rise up to form this W pattern. This W pattern can also be extended one, as I said, it can go below this zone here. So this is the kind of structure that we have available on higher time frames. Now let's talk about other stuff, right? So these are kind of regular support and resistance zones, or you can call them as supply demand zones. So these are all the levels that you have. I will provide the screenshots and the live charts for this, so you can refer to them as you like, right? You'll be able to find how what levels these are. Okay, so these are all the relevant points that the market can actually react to them. As you can see, the market usually tries to violate them a little bit, but they are just for your reference, and sometimes they actually work really nice if they line up with FCP zones or Fibonacci levels or other things. Most of the retail traders, they actually try to trade these support and resistance zones, and as you can see, they are not that accurate, and that's why they tend to have spikes going through their stop losses. Now let's look at the other things, which are this. So these are the levels that I'll be more interested in looking into. So what we have here is that market has been going up, and if you notice that market has actually come to this major fib, which is basically 38.2 Fibonacci level, and market got pushed back up. Now it could be falling back down to retest and then go back up. Why I'm saying that, I'll show you a few things there, but let me first go through the levels that I was talking about. So this level is 3883.7, then 3809, 3769, 3709, near about these levels. Okay, so this is where the market could be doing something like this, a double bottom sort of thing, or the market can actually fall slightly below, collect all the stop losses, create a fake breakout. Everybody will start to scream and shout, saying that the market could be heading for further downward now, but it can still rise back up. So if it starts to rise, we have this trend line. Let me correct that, actually this is not valid. So that trend line should be like this. So if the market starts to rise, it can do something like this. It will go and reach the trend line, and most probably somewhere around here or here, one of these levels here. Okay, now let me give you the fib levels, which are very important, because if the market starts to rise, then where can it go to? So if I come here and draw the fib, okay, so we are at 38.2, which means that market could be heading into this FCP zone here, which is near about let me adjust that a little bit. So it's going to be approximately 4542 and 4582, somewhere in there. Okay, and we also have an important level around 4455. That is quite a possibility, and on the lower side of things, we have these levels available to you, right? So these are important levels, but one step at a time. Upper levels can only be reached if this midpoint has been broken, and one of the things that you might be able to identify from this is that market has broken through this trend line. It went up, now it is coming back down. So if I extend this trend line, it's quite possible that it will probably come back down to test one of these levels confluencing with the trend line before it starts to go up. So beware of this sort of movement here. The market can do something like this, and if this level is broken, then we are looking for further movement upwards, right? So this is what you should have. Thank you for watching. Find and follow us on these social media channels.